Okay then folks, I just want to do a trade update and just bring you up to where we are right now. If you remember in this morning's daily analysis video, I did in actual fact say that we would be heading for the level of 37.87 because we're drawing this line right here. We've now got a new A-B swing, but the level which I did mention this morning, this 37.87 level, was the previous A high of the 1 hour A-B swing. I did say that we're probably going to move up to that area, and if we do, look for the bounce off that area. Now look at the chances that we've had right here now. It's been a great trading day. Purely and simply because we hit what I considered to be a potential strong resistance area at that A high from the 1 hour, remember. Now look at this inner trend line, full body break right here. We could have taken the trade on the open here with a stop above this A high right here. This would have been a nice trade if we'd have wanted to take that, folks. It'd have been a lovely trade. Remember, in a trend line, full bodied break below the trend line, okay, and your stop below the A high, and we'd be looking for, we got a 61.8, 1.618 would have been the extension point. So that would have been the first potential. So this candle right here, let's zoom into this a little bit more, so we've got a little bit more detail. This candle right here was your first full body candle break below the inner trend line. You opened right here. We would have been risking right here around about 19 pips or so to gain around about 20-22, just over a 1-to-1 ratio, okay. We could have then, if we'd have wished to, drawn in another trend line. If we'd have placed this trend line in right here, we could have done so. But I used this outer trend line, okay. This is the one I used next. I used this outer trend line right here, and I took this A point, which was just below the previous A high point from the 1 hour. So if I just draw my Fibonacci points right here, so I just draw the Fibonacci's. So here we go. This was the full body candle break below the outer trend line, so we opened right here. This is the open point right here. What do we have? We had a stop loss of 17, 19, a couple of pips above, and a potential gain of again 19 to 20 pips, a 1-on-1 ratio, and it's still going. So that was your second trade. Let's take another look. Let's take a look at this particular trend line right here. Once again, full bodied break below the trend line right here. This is the full body break. You could have re-entered at this point, and if you had done so, you would have been entering right here. Sorry about that. You'd have been entering right here, potential loss of 20 pips with a potential gain of 20 pips or so. Maybe not so much a 1-on-1 because you'd have maybe been looking for the mid 27, 1.618. But if you've gone for the extension, you'd have a 1-on-1 trade there. Another great entry point. Let's take a look at the next one. Let's take a look at this particular trend line right here. There we go, full body candle below. There's the full body candle below. This is your A, B. So you had A, B, A, B, A, B. Just let's put this A in right here. This was your next A point. So if you'd have taken this, you'd have been opening at this point right here. This would have been your opening point. You'd have had a risk factor of 15 or 16 pips. Let's draw in this Fibonacci. Let's see what it would have given us, folks, okay? And we're still playing this particular trade right here. So this was your entry point right here. You'd have been risking 16 pips for a potential 25 pip gain. We are currently 10 pips. If you'd have taken a couple of lots on that, you could have cashed one lot in and still had 10 pips locked, and you still have 10 pips running, which means that potentially you've got a gain there of approximately on your two lots 48 pips or so. So that just shows you how you could have entered moving down this particular move. And we had a reason to enter. Why was the reason to enter? Because I told you that we were looking at a potential resistance area at the previous A high. Score a point, pull back, look at this pullback, look at this trend line. As long as we're below this trend line, you can continue to trade short. Now if we just join the next trend line, let's join this next trend line. Look at this. This is your next trend line. AB. Let's put in your next AB. Let's have a look. AB. So this would be your next A high point. So what we're going to do, we're going to retrace to the back of this trend line. If we get a full candlestick below this particular trend line, you'd enter on the next candle with your stop above this A high. You can continue trading this trend until it bends. The trend is your friend until it bends, folks. A simple strategy. Follow a simple strategy to get your pips. Thank you very much.